Hello, traders. It's 8:02 a.m. Chicago time on a Wednesday, the 19th of December, 2018. As I said yesterday, this is the last full week of trading for the year, and today is FOMC day. It's so exciting. I think I'm going to have an interest rate reveal party for the FOMC today. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future result. Risk is on today slightly. Crude is getting a small bounce, 1%, 50 cents, trading at 47.14 after getting pummeled yesterday. The Russell's leading the index complex, up 10.3 points or 0.76%. The laggard today is the dollar. The market's pricing in about a 71 to 72% probability, I believe, last I checked, um, of an interest rate hike. It's very, very important to pay attention today to how Powell speaks of what the FOMC has decided going forward. Now, there's a fair amount of room that the FOMC might surprise. There's been a lot of political pressure. Politicians don't like the people they put as Fed chairman to slow down the economy when they need to get reelected. So there's a fair amount of tweeting about that and pressure there. I'm not sure if he'll succumb to it, but we'll get an indication of how many rate hikes we might expect next year, or they may leave things very, very vague, sending the market into a tailspin anyway. So that's the big, big, big thing today to look out for. That's expected to come out at 2 o'clock Eastern, 2 o'clock Eastern, expecting at 2.25 to 2.5% on the Fed funds rate. And of course, we're looking for Powell's comments. So that's about that. That's the only thing. Well, we have existing home sales coming up for November, expecting 5.2 million at 10 o'clock Eastern. We got current account earlier. Again, even though the allocation this morning is slightly to equities, slightly to risk. Um, we have tended to open up that way over the last couple times, and we've tended to sell off. So it's the same holds true. We have rollover continuing, although it is coming close to its conclusion based on CME rate of roll data. We do have quad witching Friday. By the way, I'm not here on Friday. I will not be trading on Friday. I'll be on an airplane during this time on Friday, hopefully. And it's the end of the year going into a long weekend, really. So I would be extra cautious on Friday. We may see some pretty good moves on the close. So, with that being said, let's move on to our review segment. So, to review, yesterday the market was opening right on the low volume node, right in this little spot here. That's a low volume. That's what's called a low volume node on the profile. This is the spot that separates the upper distribution where the market traded. If you can call that balance, it's not really balanced. Look at that profile. It's terrible. It's very boxy. Um, so that's what separates the upper distribution from the lower distribution on a double distribution neutral extreme down day on Monday. And so it puts us in a position where it's either going to tip, up or down, and depending on how it holds that low volume node. Like for example, for our primary scenario, the expectation is that it is likely to try to go up. Oop. It'll try to go up, and then sellers will likely come in, bringing us below this 71 area, this key area yesterday. And if so, then I'm looking for it to close the point of control, that maroon line there. And as I said yesterday, the expectation was for it to spend the entire range inside of Monday's range. Monday's range was quite large, 72 points or so. And the expectation is we would spend most of it inside of the range. So I expected it to make an attack at the low, but to balance out and hold sideways. The secondary scenario is the opposite. Push down, attempt to get back, be responsive, attempt to get back into the point of control, fail to do so, and push into the upper distribution, get tangled up in these confluence areas above, right here, these stock zones here, and then hold sideways as well into Wednesday FOMC day. Here's what actually happened. So that's all well and good, our imagination, our pie in the sky scenarios. But here's what actually happened. We opened still right against that low volume node. We had a nice clean opening swing. It's an open auction in range, so there's a two-sided trading that broke to the upside. So now we're looking at initiative. I was looking to that talked about this in the Convergent chat room. I was looking to sell this stock zone up here on the first test. Didn't quite get there. It turned well ahead and turned back towards the OS low, made a second attempt, and then broke the OS low. So now we're in the lower distribution. So now we target scenario one is on, and we target the point of control. And we ultimately did get the point of control, but we also continue to sell off. We continue to do these impulse pullback, continue, pullback, flag, impulse, pullback, impulse, flag, and so on. It's just one of those. This is that horrible kind of day. If you have an upward bias, it gives you the chance to see that there's a little bounce coming, keeps you holding, and then it drops right through very quickly. And so this is where my primary scenario and what actually happened diverged a little bit. In that we took out the low. Instead of an inside day, we continued the one-time framing down. We put in a lower high, and we exceeded the low, although one-time framing down does not require a lower low. It just requires lower highs, meaning on a trend down, we're much more interested in buyers unable to sustain higher prices, much more so than we are interested in sellers pushing to a new low price. And so we pushed through the prior day's low, which was not expected given the range, and then bounced back up to VWAP, and then we just sold hard on the close. So yesterday just finished up ugly for anybody who was a buyer. The attempt higher was cleanly rejected. That is an excess high right there. And the buyers just puked out very rapidly. What we ended up with is a continuation of the trend. Here we go. So this is the composite. So again, as I discussed yesterday, we broke out of this micro composite balance zone here that we've had for some time. I'll turn on the box for the dates, 10/11 to 12/14. We broke out of it right here, and then yesterday we put in lower lows yet again. So we're drifting into this this low volume node on the composite and are trading through it. It just isn't looking so hot for the buyers. Now, buying can take place today. Of course, who knows what the Fed is going to do. Although by traditional measures that others may pay attention to, the market looks terribly oversold. But overall, I have to trade what's in front of me, not what I expect. So the overnight session, though, if we look at if we look at the order, so this is my heat map, my order flow. If we look at what how we traded yesterday and the sell-off, you could see these big prints. You could see the delta dropping very rapidly on that sell-off. There was a lot of volume that went through on the close yesterday. But since then, since the reopen right here at 5 o'clock Central, 6 Eastern, the market has drifted up, and we're not seeing a lot on the heat map that kind of stood in its way. It was a little bit right here, but there isn't all that much. It's just very easily drifted up in the overnight session. So if we look at the CVD from the low, it's just been on the rise there. So overnight inventory looks long to me. Let's go back to our review screen. The overnight inventory looks long to me in price and in delta, but as it was yesterday as well. So it's just one of those things where we have to wait to see what the market does when it opens, and of course push the short side much more so than the long side. Although today is a special day. So the market is drifting up. We have a P-shaped profile in the overnight session. This may indicate, and I emphasize may, short covering on the way up. We pushed right up into this excess high. You see, it's yesterday it was 25.6250. The overnight high was just one tick higher before it sold off. So we drifted and took back this entire sell-off that we had in the overnight session and just walked right back up. We have quite a distance to the mid, and we are testing VWAP right now. The most important thing to take away is that prices below have been rejected as it started to walk up. We have a P-shaped profile. So the overnight session, as it has been lately, is skewing on the buy side. Coming into today, let's get into our current screen, current action. Coming into today, this is the 15-minute here. See where we are right here? We are in this composite low volume node right there. Why isn't it coloring there? Oh, I see. Let me fix this 1 second. My whiteboard is cut off there. Okay, so we're in this low volume node right here. Composite low volume node right here. This is where we're trading currently. And to me, it looks like it has some room to continue down into this 25-25 area. But coming into today, I expect that it's likely to be very choppy coming with the Fed ahead of us. We're opening in range. I cannot say that there's truly value from yesterday. Yesterday behaved a little bit like a trend day down. There was, at best it's a double distribution with the cutoff point being the mid there at 54, 25.54. But yesterday's profile is very, very odd. A lot of price discovery after bouncing on the top. Looking at today, I'm expecting an open auction again. I'm expecting it to drift up again, push the overnight high, potentially test this 25.66 area again, impulse down, start walking its way down into the prior day's close, more of the continuation of what we've seen over the last couple of sessions. And then eventually what happens is we have FOMC kicking in at 2 p.m. Eastern, and then it's anybody's guess. But the primary scenario is that we're likely to test up, and if we test up, then I'm looking for it to drift into 25.38. 25.38 becomes the target on scenario 1 if we hop on that train. Scenario 2 is the opposite. Opens, shifts down immediately, starts walking towards 25.38, impulses up, gets back up above yesterday's mid, and then starts walking towards the overnight high before stabilizing into the FOMC. So behind here is FOMC, and hey, your guess is as good as mine as to what it's going to do, right? The market's really expecting something big here. Otherwise, we're likely to just continue dumping. The next area down is 25.25. The next big area is a century figure at 2,500, and we can cover that within a few minutes of dropping below yesterday's low in the volatility that we're in now. I know it's not very helpful because anything goes right now. Um, it just, it's just we have to be prepared. The first things first. Wait for the market. Hold. Keep your powder dry for the real fight, which comes after FOMC. All right. So, hitting your limit today before the FOMC releases is just kind of dumb. Don't do it. Just stick around, keep things ready, stay ready. Go to sim in the morning if you like, and then wait for the FOMC. The FOMC is where the real move is likely to happen. The market's likely to drift or reposition ahead of it, but that's about it. We still have a roll that's continuing as well, so that could be um, that could be an issue, but overall, just chill out, wait for the FOMC to show up, and then look to see if you can trade a pullback in the majority wave on that release. Okay. Good luck today, and I'll catch you tomorrow morning. Take care.